Good afternoon, everyone. This is Blue League Markets. Welcome back to yet another video. We greet you from all the parts of the world and would like to thank all those who are watching our videos from all the different parts of the world. We have seen the stats and it's looking pretty good. So, this is a private video for those who have paid the private mentorship, and now we're on lesson number 12. We're still on part A, which is understanding smart money. We'll go on part B, which is advanced smart money. Now, on this episode, or rather class, or rather session, we'll be talking about the sell and the buy zone. So the sell zone versus the buy zone. So this will be a short lesson. I'll just teach you that there are two different zones. We have the sell zone and the buy zone, and where to place your sells and where to place your buy, right? So remember the toolkit that I told you guys you should do on the first lessons. So we have this. I told you guys to get a fib retracement, right? Now, a fib retracement, we won't be using all the levels that you see other people use on your fib retracement, right? We'll only be using three zones. We'll be using the 0% zone, the 50% mark, and the 100% mark, right? Or you can rather say the 0 mark, the 0.5 mark, or the 1 mark, right? So these are the zones that we'll be using in order to understand where the market is and whether we should buy or sell. Let's make an example. Let's say we're talking about an uptrend, right? So if we're talking about an uptrend, that means your market is pushing to the upside, right? So it keeps on making higher highs and higher lows. It keeps on going up, having a pullback, then it goes up, having a pullback, right? So we need to understand if the market has completed its pullback or it has not completed its pullback. Because sometimes you would go to your market and you'll think the market has completed its pullback, but yet the market has not completed its pullback and it's fooling people. Then it will take you up. Excuse me, then it will take you out as part of liquidity. Let me make an example with this. Let's say the market is going up, so it keeps on making high highs and high lows. Then let's say at this particular instance it brings a perfect let's say order block, right? It brings a perfect order block, and you think that the market will then react to this order block. It becomes dangerous. Let's say it printed this order block, right? And you think that the market will react to this order block and it will continue breaking structure to the upside, right? So you think the market, when it gets here, it will break structure. Let me delete this just to make a better point, right? Let's say the market is doing this and you're thinking to yourself, okay, the market, let's say this is here. Yes, let's say the market has came here and it has collected whatever order it was collecting, right? So it was having a pullback, it took out inducement, it took out liquidity, and it collected whatever it collected there, right? Then when the market gets here, let's say at this point it didn't print any imbalance or it didn't print any order blocks, but when it got there it printed an order block. Now you need to understand that there are two zones. There's a buy zone and a sell zone, like I mentioned, right? When you take your fib retracement and you draw from your highest point, no, that's not a fib retracement. Let me delete that. When you take your fib retracement and you draw from your highest, um before you take your fib retracement, then you think, okay, the market has printed a perfect order block here. That means the market will buy, and you put your stop loss there. Then what you realize is that the market will then come and activate your order. It will give you hope that it's going up. The next thing, the market will go down, collect orders, then continue going up. And you'll think that smart money is not working. And the only problem here is that you didn't really consider the buy zone or the sell zone. So when the market brings something like this, right, what you should do is you need to understand whether your order block is on your buy zone or your sell zone. So now remember, guys, we're dealing with an uptrend, right? Just so we're clear, we're dealing with the uptrend. The market is going up, right? So since the market is going up, we are only interested in taking long-term buys and short-term sells, right? So now we're going to look for an important order block here. But now, in order to see whether this order block is perfect, let's say we have two. We have a high probability order block and a low probability order block around this case, right? So now Someone would ask me, which order block do we take orders from? Do we take orders from this order block, or do we take orders from this order block? What you need to do, the solution to this is you take your field retracement, you put it from your highest point to your lowest point, right? Then what controls you is your 50% mark, right? On your 50% mark, the upwards is your sell zone, right? So this is where you'll take your temporary cells, right? Your short-term cells, short-term cells, right? So that's your sell zone. So everything you do on that upper case, right, which is above your 50%, everything you need to do here is only take sell and nothing else. You cannot take a buy here until the market goes beyond your 50% zone. But the minute the market goes beyond your 50% zone, that's where you can start taking your long-term long-term buy, right? So ultimately that's your buy zone. Now remember, we're focusing on an uptrend, right? That's your buy zone. So anything below this 50% line, that's your long-term buy or your buy zone. So what I'm trying to explain here is that you need to understand when you have your higher high and your lower low, you take your field retracement, right? You place it on your lower low and you place it on your higher high. So whatever you do on this part is your sell zone, which is your short-term sell, because you know ultimately the market is going to come and click a certain order here, then it goes up. Now this, if this it's a high probability order block, please don't take any orders here, don't take any buys on this, because this we can call it SMT, right? Smart money trap. So this might be a very good SMT, smart money trap, because they know that we trade smart money, right? So they present high probability order blocks on a wrong zone just only to trap us, right? So this becomes your smart money trap, right? So if you take an order here, it might play out on few hours or few minutes, then the next thing you'll see the market giving you a strong rejection to the downward. So the market might come and react to your order block. It might give you it might promise you to be going up, but it's as long as the market has not gone below your 50% mark, that means your your market has not yet started having a pullback. So this is what will happen. The market will then come to your low probability order block, or it will then come and take any inducement out. Then it will continue up until it breaks structure. So this happens on your buy side. I hope this makes sense. Now let me explain it one last time. Let's say the market printed out a low probability order block and a high probability order block and a low probability order block. The only order blocks you need to be focusing on in a buy are those which are below your 50% zone, right? And the only order blocks are you looking for when you're taking any sell, they will be here, right? So if you find any order block there, you might take a short-term sell. But now if we're looking for a long-term trade, we're only going to look for order blocks here. I hope that makes sense. Now let me just explain that in terms of a down trend so that it makes more sense. Let's say the market is going down, it breaks, it continues breaking structure, does an inducement, breaks that inducement, then go up, right? So the minute the market is having something like this, right? But now when the market came and collected orders here, so this is the past um, 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 market structure. So the market came and collected orders there. It then did what? It then broke structure here. So we have a good break of structure to the downwards, right? Now the market is then starting to retrace, right? So we see the market retracing, and now we're curious, where are we actually going to take orders, right? Let's say when the market was doing something like this, it printed three order blocks. It gave you an order block there, it gave you an order block here, and just for interest sake, then it gives you an order block there. Let's say between all these order blocks, this is a high probability order block, This is a low medium probability order block. This is a low probability order block. So which order block do we take orders from for a long time sell? So it's simple. You just take your fib retracement, you take it on your lower low before the market broke structure. So the last point before the market came and broke structure, then you come and take it and put it on your lowest point. So no, the highest point before the market broke structure, then you take it to your lowest point, right? So you take your fib retracement, take it from there to there, right? So anything here is a short-term buy, anything there it's a long-term sell, right? So which order block is correct between order block A, B, and C? Ultimately, order block A, it's now incorrect. It's what we call SMT. The reason it's incorrect, it's a fake order block. The reason it's a fake order block, it's because at this point, the market has not yet started making perfect pullbacks, right? So the only order blocks we're going to be considering are those which are above your 50% mark. So this ultimately to us becomes what we call an SMT. So don't take any trades here and thinking that the market has completed its pullback. No, the market has not completed its pullback. So this becomes SMT, which is smart money trap. So the market might come and react to this order block. So the market might do this, come and react to this order block. Then the market might go that side, and you think that the market has broken structure here. And what you'll do is you'll put more orders there. So it will continue creating SMTs and going up. Go up. It will continue creating SMTs and taking liquidity, but the market has not yet completed its pullback. Now, someone might ask, what happens if the market comes and reacts to that SMT, then creates another lowest point, then continues doing something like this? So now you have a new lowest point. You need to move your fib retracement to the lowest point, right? So now this becomes your new low, right? Until the market completes a 50% pullback, you keep on moving a low or a high as it continues breaking structure. So if there was another order block here, maybe let's say the market was like this before, right? Then the market continues breaking structure and it comes here. Now this order block was invalid at this point because it was up below your 50% zone. But as soon as the market did something like this, created another low, now this order block becomes valid. Obviously, you're going to mix with liquidity, you're going to mix with inducement to tell which order block will play out between the two, right? And you're also going to confirm with your lower time frame analysis. So now order blocks which becomes correct in this point are these two order blocks, and whatever order block is here is what we call SMTs. So if you're looking for any long cells, you'll take them from any of these order blocks here. So any cell will be here. Now you can also use this to predict your stop loss, right? So your stop loss and your take profit. So if you want to be on the safe side, you can put your stop loss above your 100% mark. Then your take profit will be where the market is going to break structure, exactly here. Then you let the market play out. On the next video, I'll be making examples based on this theory. We'll be doing a practical to it. I hope that you guys enjoyed this video. Please don't forget to like, comment on the videos, and tell us if you understand everything we're teaching you guys. Engage with us so we can continue. This is your mentor signing out.